Well, shares of Las Vegas Sands and Wynn Resorts, they continue to move. Both of those casino stocks cut to neutral from overweight today by J.P. Morgan. John, kicking it off with you. You're long on Las Vegas Sands. I kind of see you as a crap table guy, too.
Maybe a little bit, Frank, but more 21 or blackjack. The issue here, of course, is that China has just been doing this circular firing squad on a number of industries, Frank. So let's focus in on these for a sec. They really came under fire because of what China's looking into with Macau. So anybody with exposure to Macau, and you named two of the biggest, Wynn and LVS, other than Melco, those are really under pressure. I'm long the October and the January 40 calls, Frank. I've written upside calls against them, but as both of those stocks slip, I basically have to, at some point, exercise that discipline and cut losses, because it certainly hasn't been a good week for anybody who's in any of those Macau stocks, Frank.
Jim, over to you. You own Wynn. You recently added to your position. You got to also name what game you play when you go.
Yeah, okay. Well, I recently initiated it about a week and a half ago and added to it after the deluge this week. But, that said, when I bought it, I thought that the China news was already in it. Clearly, I was wrong. The stock had come down from 137 to about 100. Now it's at 83, so clearly I was wrong. But I'm sticking with it here, and I don't think that this is the time for the downgrade or to sell it. And the reason why is this is not a primarily or purely Macau story. They have U.S. operations and they have online betting. Those operations were 60% of EBITDA in the first half of this year. I got to say that it would be nice for Macau to come along and not be as bad as it's looking right now with China. We'll have to wait and see how that goes. The concessions in Macau are not up for renewal until next summer, June to be specific. So there's a lot of runway here. And I do expect Wynn in particular to bounce because of the geographic diversity that it has. That said, look, this is obviously a volatile stock. It's 2% of my portfolio, which is below the normal size. I do recommend that anybody who owns it in small size. As for my game, it's blackjack. It's a thinking man's game.
All right, we go. I like that one.
There you go, Jim.
Yep. Got some consensus on this investment committee. Well, a few more calls that we want to hit. Two bullish notes on Cisco Systems. It was just added to J.P. Morgan's focus list. A lot of J.P. Morgan today. And upgraded to outperform at Credit Suisse. Jim, back over to you. You actually own a Cisco.
Yeah, there's a term we use in investing called steady Eddie, and it's something that you can just rely on year in and year out. And that's what Cisco has been over the last 10 years, which is what the period of time I've owned it. It has steadily performed with the market, and then when you add the nice dividend yield on top of that, you get a little extra. So this is not a stock that I'm expecting to be like a Salesforce and shoot through the roof. It's not a stock that's going to have the volatility of one of the casino stocks that we were talking about. It's a steady Eddie. It just returns year in and year out. I don't have to worry about it too much. They had a very good analyst meeting yesterday. Although the stock is off a little bit today, even with the downgrade, that doesn't bother me. I think that this is a stock that over the next year, you'll see 10% plus the dividend yield.
All right, there we go. We're going to have a special guest appearance, if you will. Chipotle getting its price target raised to a new street high. Piper Sandler raising it to $2,600 from $2,235. The stock's rallied more than 35% this year. And Joe Terranova, he joins us now. You own Chipotle. Just to stay on theme, what do you get on your burrito when you go? You got to finish with that.
Oh, Frank. Well, on that burrito, I basically get everything loaded up. And after listening to Josh and John, I think I want them to add Bitcoin to it, to have a Bitcoin burrito. But I purchased Chipotle back on March 31st at around $14.30. So I have a nice cushion in the stock. It was added to my quality momentum index earlier in the year. That's one of the reasons why I looked at it. What we have here is Nicole Miller-Regan, who is just a fantastic quick-serve restaurant analyst. She has been the most bullish. Now she's really going out with an aggressive price target. So the question becomes, what do you do right here? If you own the stock, I don't think at all you give consideration to selling it. You stay with it. If you don't own the stock, the question becomes, do you put new money to work, or even do you want to add to your position? So there's two things to give consideration to. In the near term, the cyclical element is, look, all of the quick-serve restaurants right now, the bullish thesis is on a very strong U.S. consumer. If there's weakening in that U.S. consumer demand, then you're going to have a cyclical correction. If you have the evidence to support that, you wait. But the bullish thesis on a secular basis is all about the opportunity to expand the store units from where they currently reside for Chipotle at 2,800 units to ultimately 6,000 units. And guess what, Frank? You're talking about a franchise that only has 33 stores outside the U.S. So slowly expanding in Canada. They're adding 8 stores this year. They're targeting Western Europe. They've got some stores in the UK, France, and Germany. But that international expansion is what's going to grow the revenue over the coming years and ultimately grow the stock into the valuation and realize at that point that you could see the 35% upside to Nicole's target at 2,600. So
Joe,
I think that's a real possibility.
We're going to have to leave it there. We appreciate it. Josh, I know you'd go for an NFT burrito, but really quick, you own Shake Shack. What's your take on the quick service market as we see the economy, where it's at right now, and the Delta where it's at right now?
Yeah, listen, Shake Shack has held its own through the pandemic. That period is now over. I think it accelerated a lot of what their growth plans are. And I think that's for the better. It really forced them to get serious about people ordering on apps, coming to pick up the food, get serious about better delivery options, and possibly even ghost kitchens in the future, which I think every quick service restaurant is going to have to wrap their head around. And it also helped them come up with ways to repurpose existing stores in urban areas, more windows, some drive-throus, which they hadn't really done a lot of. So I think like most cutting-edge, fast-growing quick-service restaurants like Chipotle, like Shack, there are going to be winners and losers. It's very hard to just look at the whole category and say I'm bullish and or bearish. So I think Shack will be one of the winners. We already know Chipotle is the gold standard, probably the best company in the world at what it does. And now you've got some new companies coming along. I don't know if you guys saw this Dutch Brothers IPO. The thing went up 41% on the first day. People that visit that store in the Pacific Northwest tell me that it's going to invade the rest of the country like locusts because once people start drinking their product, they can't get enough of it. So I think it's a dynamic space. There are always winners and losers. It's never a monolithic story. And right now, Chipotle is the biggest winner in this group, and we should just recognize that and understand why people are so bullish.
Yeah, some other pressure for these quick service restaurants. Also, companies like GoPuff coming out with their own ghost kitchens. Another source of competition right there.